Okay, then we actually go to the third part of today's meeting is that portfolio game. So once again, this is my allocation. Okay, hope you all can remember. Just a quick recap. So based on the session of financial planning, okay, this is my ideal allocation, 20% endowment. So my unit trust, probably I have to bundle them together. Okay, so I realized that what happened is when I actual implementation, it probably makes sense for you to bundle together. So unit trust and ETF, I should hit about 30%. Okay, unit trust and ETF hit about 30%. Then for REITs, okay, 20%, stocks about 30%. So that's my allocation, my ideal allocation. So this is my actual allocation. So you can see that it's actually quite close except for endowment. Endowment, I should hit about 20, but I only have 11. ETF and unit trust, I now have 35%. Okay. But then down here is 10, 10, 10. So it's about 30. REITs, I should hit about 20, so I'm about there. Okay, stocks about 30, so I'm about there. So basically is I should actually ramp up more my endowment. Okay, so once again, you don't have to hit ideal state from day one. Okay, but eventually over time, you can see it should work towards the ideal state. Okay, then again, this ideal state over time, you actually give me about 6.75%. So again, hopefully it's actually very clear. End of the day, it's not just about what to buy. It's not about which stock to buy. Okay, it's about how to buy, how to design your whole investment structure. Okay, how to design your whole investment structure. Okay, for you to get your desired returns. So this is the current allocation. Okay, for my ETF, these are all the ETF I have purchased so far. From Jan, I got the China ETF. Then I First Trust QCLN. This is actually all the energy, the batteries, Tesla, so on and so forth. Then Amplify is on Bitcoin. Okay, last month I actually get into STI ETF and Lion Philippe ETF. So this is what I bought since January. Unit trust, I actually did some, okay, probably this is so ESG, okay, Schroders climate change. And I bought a bond fund here. Okay, I actually got a bond fund here. For REITs, these are the REITs. Okay, so I've been buying REITs every month except for last month. Okay, build up my REITs portfolio. And these are my stocks. Okay, so as you can see, as long as I can buy something different, I will buy something different. So I will not repeat buying the same REITs or same stocks. I try to avoid that. Okay, and so far I have been able to do so. Okay, so again, you never know. Okay, you can say that, wow, maybe CapitaLand is grade A, will never collapse, will never become like Eagle. Who knows? Nobody knows. Like for example, way back, there's actually this company called Chartered Semiconductor. It's actually well supported by the government, and yet it also can go delisted. So you cannot say that, or because it's brand name, because it's listed, because its brand name is related to government or whatever, okay, you sure it's okay. Like for example, even a High Flux. So High Flux is also well supported by Temasek also, but things can also go wrong. So that's why diversification is very important. You can see it's actually all different. Okay. The only thing is the same is the funds. Funds, because I go do things like RSP. Okay, then I only stick to one fund unless you have a lot of money. So of course, if I can, I also can diversify. Because if you want to do RSP, regular saving plan, that means automatic buy for you. Okay, they only allow one fund. You cannot tell them that, oh, this month buy this fund, next month buy that fund. That one you cannot do RSP. If I do RSP, had to be on the same fund. So only for fund, then I do every month the same. But even if I buy every month the same, right, I am actually looking at a basket of stocks. So it's actually still fine also. Okay. So with my $5,000 today, so as I mentioned, okay, I'm actually low on endowment, so I probably ramp up on my endowment. Okay, this month will spend $1,000 in endowment. Okay, so this unit trust, I am on RSP, so I will buy this again. And based on the exercise just now, yeah, I will actually go into CapitaLand Integrated Commercial Trust, CICT, and Value Max. Okay, that's my selection. So with that, that's how I actually going to invest $5,044 today with remaining cash of $1. Okay, the robo portfolio. So this is all your contribution. So please remember to contribute again before you go. I've been tracking all your contributions. Okay, so last month, you have bought into Aviva, okay, Schroders Climate Change, Keppel DC, Nico AM, Micro Macquarie. So these are your popular choice, are the top choices among you. And I'm proud to say that, okay, the performance is actually not too bad. 35443. So you are actually in the money, and this amount haven't include dividends. Haven't include dividends. Of course, include dividends, it will actually be slightly more. Okay. So currently my portfolio value is now 35791. This is my portfolio value. Okay. The invested amount is actually 35,000. So a little bit of money there also. And for the robo portfolio, also same thing, is also making money. So hopefully you all will actually refer to all this. Hopefully you'll refer to all this. And again, it's very clear. Okay, end of the day is how you buy to create the portfolio that's actually important. That's the point that we actually want to stress across. Okay, like for example, quite interesting. At the beginning of the year, I actually go into China. I was actually quite bullish about China. And that's why I actually pick up some of the China ETF. And again, thank God I have diversified. So of course, for those who actually follow the China market has slammed down quite significantly. Let me just share with you all the chart. Let me just get a code. 000. So correct. So you can see that it's actually quite a deep correction. There's actually quite a deep correction. And again, luckily, because I diversify, the impact is actually quite minimized, and I'm actually still above water. So that is the beauty about diversification. Okay? Generally speaking, you wouldn't have certain things that will cause your portfolio to lose money.
On the note of China, right, I
Yes.
randomly happened to see Tencent boss lost 18.9 billion. He lost more than China. It just popped out on my news.
Yeah, correct. Yeah, yes. So that's why diversification is actually very important. I heard it's actually quite sad. I mean, I heard stories like friends of friend, this guy retired. So he only break his money up to 3 parts. CPF, fixed D, and high flux. And so now 1/3 of his savings gone. Yeah, so never do that. Never do that. No? So that's why cannot assume that wow, this one confirm is there, confirm is good. No such thing as confirm one. Okay, so this is my portfolio. I will hand over to Jimmy to share his portfolio. Jimmy, the screen is yours. Let me make sure you can share.
Okay.
You can share now, yes.
Right. Okay, this is mine. Okay, for those who are seeing this for the first time, my portfolio is a growth portfolio. I'm aim to split out in the following portions: 50% equity, 20% STI, 20% China, 10% gold. My target is 7.5% annualized, a geographical diversified portfolio as well, and it has to be hedged against USD. And the reason why I need to hedge against USD is because some of the stocks is actually in US dollars. So this is what I have for this month. The Nikko AM STI is the one which go with RSP, and the China LG9, which is the A50, is on RSP as well. But this month, on top of the RSP, which is $1,000, I decided to double up. In other words, instead of buying just $1,000 worth of China ETF, I decided to add 2 times because the price has come to, the price has dropped drastically. But on the other hand, the STI has actually went up. So it's sort of like negated somehow. I have added gold. Reason is because gold has come all the way down. It was bullish. I was bearish about gold, and I'm still continue to inclined to be bearish. But then the thing is that the price comes to be a attractive level, which it will be able to hedge against my China ETF, which is in US dollars. So I have added 10 units on this. The other one I add onto it is Genting at 80 cents. Seems to be a recovery stocks that I'm looking forward to that. I opened a new positions. So this previously wasn't there, but I opened a new positions today. It's a Lion Phillips ETF, REITs ETF. And because of the leftover amount of money that I have, because I have a excess of cash from last month, so I can afford to buy 3,000 units on the CLA at 3,000 units. And the reason why I'm looking at this is because the price has came down to a level whereby I feel that it is inexpensive. So that's basically my investment for this month. So if I would add all these up, total value is 39,980, right? And I still have a spare cash of 1,283 for the following month. To date, I have invested the total amount of money that was made available is 40,000. 39,980 is including the cash is the total value. I'm in a loss of $91, which is basically represented by a percentage of minus 0.23%. So that's my portfolio.
Actually, including dividend won't be lost.
Including dividend, I won't be lost. In fact, this dividend itself, I make a calculations of from January onwards. I would have got around $200 to $300 on just on this alone. Just on this alone. So yes, if it's including dividend, I will be above water. Yeah.
Thank you so much.
Thank you.
Okay. So hopefully, every month, I know we are very lost, so every month repeat itself. Okay, but hopefully it have really drive the point across about portfolio management, about buying different things at different time. Hopefully that's clear.